Should your tenant screening criteria address application fraud? Imagine spending time and money finding the perfect tenant only to discover they used fake documents or stolen identities. That's a risk you don't want to take. Application fraud is a growing concern in property management. Recent reports show that over 93% of property managers faced some form of rental application fraud last year. That's a 40% increase from the year before. This kind of fraud can threaten your rental income, your property's safety, and your business's stability. When you don't include measures to prevent fraud in your screening rules, you might let in tenants who falsify their rental histories, forge documents, or steal identities. These applicants often slip past basic checks that relying on gut feelings or incomplete information. They might submit fake pay stubs, create non-existent rental histories, or use stolen driver's licenses. The financial damage can be huge. A tenant who commits fraud and then stops paying rent, damages your property, or requires eviction can cost thousands of dollars. That's why it's smart to build fraud prevention into your screening process from the start. Start with identity verification, requiring applicants to submit government-issued IDs and fill out detailed rental applications. Make sure every question is answered and supported by documents like pay stubs or bank statements. This forms your first line of defense. Next, use multi-factor identity checks. Verify that the person's ID matches their face by scanning the ID and comparing it to a selfie. Cross-check their details against trusted databases. Many fraudsters can't produce matching documentation, so this step helps catch them. Income verification should follow a waterfall approach. First, try automated data sources that connect directly to bank accounts or employer records. If an applicant claims $6,000 a month but their bank shows less, that's a red flag. If these sources don't give clear answers, requiring manual document uploads with fraud scanning technology. Employment verification is also key. Ask for pay stubs, W-2 forms, or official employer letters. Don't just accept claims at face value. Cross-reference these documents with the applicant's stated employer and income. Make sure your written screening criteria specify that all applicants must provide valid photo IDs, which you will verify manually. Requiring supporting documents to be uploaded through your screening platform, not email or in person, to keep a clear record. Use third-party screening services for credit reports, criminal background checks, eviction history, and income verification. These services access large databases and have fraud detection tools built in. They also help you stay compliant with fair housing laws by applying consistent standards to everyone. Create an internal checklist to review each application. Confirm that the applicant's ID has been verified, employment confirmed, income meets your minimum standards, and all information is consistent. Only then should you approve a lease. Your screening criteria should include a minimum income requirement, usually 3 times the monthly rent. This ensures tenants can comfortably pay rent and avoid financial strain. When you verify income through trusted sources, you catch applicants who exaggerate or falsify earnings. Set a credit score threshold appropriate for your rental market. For lower-cost rentals, a score of at least 597 might be enough. For mid-range properties, aim for scores of 650 to 739. But don't just look at the score. Review the payment history behind it. Patterns of late payments or collections reveal whether an applicant is likely to pay on time. Always verify rental history by contacting previous landlords directly. Avoid relying solely on written references from applicants. Ask about payment habits, lease violations, and reasons for moving out. Fraudulent tenants often can't produce legitimate landlord contacts. Check eviction history for the past 7 years in your jurisdiction. Past evictions are strong indicators of future behavior and should be part of your screening process. Modern screening platforms now include fraud detection features. They perform automated checks, verify documents, and flag suspicious activity. These tools use a waterfall approach, trying quick automated sources first, then switching to manual review if needed. When choosing a screening platform, make sure it offers identity verification, income checks, document analysis, and fraud protection. The system should generate a tenant scorecard based on your criteria and queue applications, so the most qualified are approved first. Addressing application fraud in your screening criteria isn't just smart, it's necessary. It helps protect your income, keeps your property safe, and ensures you treat all applicants fairly. Building these measures into your process saves you money and headaches down the line.